Okay, let's take a look at income statement approach. So from this equation here, can you tell me what's the sales revenue that this company is getting? Again, assuming it's a DJ service company, they're trying to provide basically music or service related to weddings or parties, events, and each and every event that they give customers, they're able to charge customers $200. That's the sales revenue part. Okay, but what about the cost portion? What's the fixed cost that the company is generating for the season? $12,000. Okay, and remember this is the fixed portion, so it stays the same regardless of the events that is held in the business. And what about variable cost? Variable cost, here we see $80, which means for every DJ service event they provide to customer, they will generate $80 of cost, for example, equipment rental or other machines rental for their event to be able to provide to customers. So this $80 is not a fixed portion, it's a variable cost, which means if they have one event requested from customer, they have $80 incurred. If they have two, $160. 3, $240. Okay? So we have two types of costs. Fixed cost is $12,000. Variable cost is $80 per event, and you're generating revenue $200 per event. So if I ask you, how are we able to determine what's the number of events that we need to hold in the business in order to have zero operating income? Remember the break-even point. How are you going to solve this problem? Does this seem right? So the X portion is the events. Here we say units. It could be also used for different problems. Selling machines, selling different types of equipment or different products. And for this particular problem in the book, they are providing events, services. Okay? So the X is the number of events. For each and every customer you provide services to, you generate $200. For each event, you have, $80 of variable cost here. And then regardless of the events, you have fixed cost, $12,000. Yes, we only have X right now. So how would you find out the X, which is the number of events? Because we want to know how many events we need to provide to customer in order to cover these fixed cost and generate zero operating income at the end. So we find out the X by subtracting variable cost 80X from the sales revenue we're generating, 120X minus the fixed cost portion, and again we want to find break even, so we set the operating income at zero. Break even point determines that what's the threshold, and if you go above it, you're getting profit. If you go below it, you're getting loss. So we set it at zero because we want to know what is this X portion. Okay, so how many events should we get in order to cover? We should be getting 100 events. Okay, so this equation up to here, and then you add both sides by $12,000. Simply move this fixed cost to the other side of the equation so you can solve X. The break-even events is 100. Which means this company has to provide to at least 100 customers this DJ services. You have to have 100 services in a year to cover fixed cost portion and variable cost, both of them. Okay, so if they provide only 80 events, then they will not be covering the fixed cost and variable costs because 200 multiply 80 gives you $16,000. Variable cost will give you $6,400. Minus fixed cost, how would this add up to? This will give you minus $2,400. You will have an operating loss if you only have 80 events. So the opposite example, if you have 120, if you plug in the equation, you'll find yourself having an operating income above zero. This is the income statement approach, really just guiding you through the idea of revenue minus expenses equals the profit. Okay, and we're setting the profit at zero because we want to find out what's the number of events that we need to provide to customers in order to break even.